Hello, I'm Ryan McEachran, and welcome to episode 55 of The DIG. On this show, we have Yannik Gauthier, Commercial Account Director of Export Development Canada, where he'll share with me and you a couple of things I wasn't really aware of, such as how does a company fit into indirect export? And also, what if you've got that deal that'll be a game changer for your company, but you found out they default and they don't pay you? It could tank your company. But this is exactly what EDC is here to do and prevent. And that's just one of the tools that we'll be talking about later. But right now, before we talk to Yannik, let's do our 6 and 60. US Senate Republicans want to ban uranium imports from Russia, but the Department of Energy cautions such a ban might cost the US over $1 billion. They may not need to debate, as Russia is now considering banning the export of uranium to the US in response to recent sanctions. Over to China, Xinjiang Mining stated their Russian subsidiary sees supply disruptions and liquidity and exchange rate risks due to the war. And the mining industry is reeling after the LME allowed a 250% increase in the nickel price and canceled $3.9 billion in trades. Mining projects wanted. Agnico Eagle is seeking to add to its portfolio in Australia to complement its Fosterville gold mine in the state of Victoria. And finally, South Korean steelmaker POSCO Holdings will invest $4 billion US in a new lithium project in the salt flats of Argentina. And that is your 6 and 60. Now here's my conversation with Yannik. Hi Yannik, welcome to The DIG.
Hey, good afternoon. Thank you.
So before we kind of get into what EDC can do, you know, the previous episode that we had Steve on the floor here, if you will, he was talking about the connections trade program, or what I used to know as pull marketing. We're going to talk a little bit more about some of the other solutions that EDC has. But first, I want to kind of talk about as a supplier where we fit within that kind of model, because some of us are, you know, we know of EDC supporting us from a direct export, I guess is what it's saying. So I'm kind of putting words into your mouth right now, but you know, there's more to it than that, isn't there?
Yeah, for sure. So thanks for raising this, because this is top of mind for mining companies, the supply chain, doing work in the mining industry in Canada. They don't know it, but even if they're doing work in Canada, they are exporting. So you're right. Historically, you know, we've been supporting companies with sales outside of Canada. We call that direct export. But we know that there's sort of global supply chains in Canada, and mining is a good one. We know that the commodity mine in Ontario, for example, a lot of it goes outside of Canada, so it's part of other supply chains. So we're very fortunate that way, because a lot of the suppliers in Canada doing work in Canada, they don't know it, but they are exporters, and we can support them. So this is, a lot of my customers are selling just in Canada, but they are exporters.
Okay. Now, if I can take that concept a little further, so I have a widget and I'm selling to a mining company in Canada. That's what you would consider indirect export. What if I was a company that sold a widget to a supplier that built something that could then, now I'm kind of going up the value chain, or the supply chain, if you will.
Yeah, we go pretty, we go at different places in the value chain. So definitely we work with, you know, the direct customer that will work with the mine, but we know that they hire some subcontractors, and we're open to consider support for those companies also, because we know that, you know, to mine the commodity, there's lots of activities that need to happen. You need to staff the site, you need to have construction companies, services companies, technology companies, and then the OEMs. So we're open to support the supply chain. So.
Okay, I think that's an interesting point, and hopefully some of the listeners say, "Hey, I might fit that niche."
Yeah, we just need to be, you know, have line of sight on an export at the end of the day, directly or indirectly.
Okay, good point. Good point. So, you know, as entrepreneurs, small, medium-sized enterprises, and really business in general, there's kind of what I call the golden constraints. There's time, money, and resources. Now, we're both, as organizations, we're trying to accelerate their opportunities to grow. So that's that time component. And then resources, that's a whole other, you know, constant of trying to find the right people for them. But let's really dig in, if you will, on that middle one, the money. How does EDC help people with the money?
Yeah, we have a few solutions to help with these roadblocks that you talked about. I mean, the two that I can address today, I'll start with credit insurance. This is a key one because it can help you save money and it can help you make money. So you know, with the pandemic right now, there's been a lot of volatility out there in the market, and a lot of companies had some defaults in terms of payment default. So at EDC, we have what we call our portfolio credit insurance, and this is a solution to take away that risk of not being paid when we're comfortable with their customers. So we had a record year in terms of support, and we paid tons of claims. And even in the US, some people have the mindset that I'll always get paid, but non-payment happens, and it's pretty frequent. So lots of benefits. I think seriously, all of companies should consider it, because the first motivation should be to protect their balance sheet and investment. I mean, one bad loss can really take away the profits for many years, and it can even put you in difficulties with your vendors and also with your bank. So you put all these efforts in terms of building your business, and then with one bad loss, I mean, you can put that at risk. And it's I find that business owners sometimes are taking lots of risk. I have a customer dealing, in the US right now, and they've got, over $1 million in receivables, and they're late in getting paid, and they're pretty nervous about, what's going to happen to them if they don't get paid. So please be mindful of that, and just keep that in mind. Protect your investment. It's worth it. The second advantage, it's a tool that can help you really grow your sales, because you can leverage that policy and EDC support to really grow your sales and provide terms. I mean, the tagline for this solution is, if your customer does not pay, EDC will cover you for 90% of the loss. So, just leverage that policy to come to EDC to say, hey, Yannik, I have a sale in Mexico. Are we good for it? And if we say yes, they're going to bid with terms and win more contracts, because it is competitive out there.
Yeah, that's correct, because a lot of companies, to mitigate that risk, they're cash in the door before the product leaves the floor, and that can be an uncompetitive disadvantage, or a competitive disadvantage, I'll put it, that people may have. So this would definitely allow that more competitive, even playing field out there. I know, yeah. And I know we have. I'm aware of companies where this insurance facility has really saved them. It could have actually, they had a big international deal. It was a game changer for the company. And of course, the nightmare scenario happened where it did default, and it would have sank the company. But because of that insurance, it actually allowed them to continue on. And so for companies that may not know, I know this is a popular tool that people know about EDC, but for those who don't, I strongly encourage using it, and you've made up some good reasons why to take advantage of this tool. So with that said, what else do you have in that toolkit?
Well, there's two things that what we want at EDC. We want companies to grow outside of Canada. We want them to go outside of Canada. And basically, there's two things. We don't want companies to say no to international contracts because they don't have the funds, because they don't have the money, or because they're concerned about the risk of not being paid. So we just touched on credit insurance, but we provide capital to companies. This is a big part of what we do at EDC. For small to medium-sized companies with requirements under $10 million, we have a guarantee program available with their bank. So we want to make their life easier. We want them to deal with their bank, but with EDC support, we want them to be more aggressive. We want the bank to say yes. We want the bank to say, hey, I believe in this project, but for whatever reason, it's tough for me to provide you with more funds, but EDC is there, and I'm going to say yes. So we want the bank to be more aggressive with EDC's balance sheet behind them. And typically, I mean, the banks they know of this solution, and we can help customers with that. And what's great about it is that guarantee can be applied for an operating line. Let's say a company is growing, they need more money on their operating line, we can support that. If it's a term loan to purchase some equipment, we can help with that. If it's basically a loan to finance an acquisition, this is something we can help with. Or sometimes I find in the mining industry, sometimes companies have lots of upfront costs or work in progress, and the banks are pretty hesitant to finance that. We can help the bank there. And I mean, we are international risk experts. So when companies are going abroad, we can even go the extra mile. We can be even more aggressive in our support for those companies.
Okay, so a company, say they're looking to invest in a target market. They finally have started some business, and now it's that decision. Let's get a foothold here and have some infrastructure in these countries or that country. So this is another approach, I guess, that they can lean on you for.
Yep. So, I mean, the guarantee solution I just talked about, this is more like for lending in Canada, eh? So you need, the company's an exporter, they need more money. We're here. The fastest way to deliver that is a guarantee to the bank. But we also do direct lending. And most of the time, it's really to support the company that is investing outside of Canada. Because even with an EDC guarantee, sometimes the bank will be hesitant if the assets or the equipment is outside of the country. And sometimes for the company, it makes more sense for EDC to be a lender directly. So this is a gap that we see in the market, and we're stepping in to help those companies because we really think that companies investing abroad will get a lift in their export sales, and we have the knowledge and expertise and the connections to provide, support and financing for those companies.
Well, that's excellent news, actually, to hear. So hopefully the people that are listening have figured out that, one that I've learned here is that indirect supply chain can actually be tied to a direct export, and you can qualify. You've got these other three great tools in your toolkit that you can leverage EDC to help you with your banking relationships and help you grow, because money is one of the major constraints in making it successful. So, Yannik, thank you very much for taking the time to be here, and I really appreciate it, and hope to have you back soon sometime.
Thank you for having me on the show. Thank you.
That's it for this week's episode. I'd like to thank Yannik Gauthier from EDC for being on The Dig. And remember, follow us on Twitter at Mining Suppliers and LinkedIn, and subscribe to our YouTube channel to get instant access to all our shows. Until next time, I'm Ryan McEachran. Take care and stay safe.